right, good evening, everybody. Hope everyone is doing well. Let's do a quick audio and visual check here. So if you could hear me, and if we're streaming in 1080p, we will go ahead and get started here in just a moment. I want to thank you all for joining us. All right, cool. Let's go ahead and get started here. Well, good evening, everybody, and welcome back to Walks and Wall Street. Today is January 3rd, 2024. It is 9:05 p.m. Eastern Time here in New York City. We are reporting live just south of New York City's Billionaires Row on 57th Street and Madison Avenue. Today is Wednesday. Short week. Obviously, Monday was New Year's Day, so Happy New Year to all of you. Hopefully your New Year is going according to plan. A few things to talk about tonight. Now, today we had an interesting piece of news that we were talking about yesterday. One of the most important leading economic indicators for the market came out today at 10 a.m., and that is the Institute for Supply Management, their manufacturing PMI. So the December 2023 manufacturing ISM report on business, manufacturing PMI dropped today, 10 a.m. We came in at 47.4. So economic activity in the manufacturing sector contracted in December, again, for the 14th consecutive month, following a 28-month period of growth. Now, this is a very important leading economic indicator for a few reasons. Number one, if you look at the economy, right, the way the economy in the United States is made up, it's about 20% of GDP is manufacturing, and about 80% is services. So the Institute for Supply Management, they will put out the manufacturing PMI on the first business day of the month, which we got that out today. And then a few days later, we get the services PMI. So even though, technically speaking, manufacturing activity contracted for the 14th consecutive month, I think it's a little bit more important to interpret the PMI report in a little bit of a different way. Okay, and at least this is how I was taught. And tomorrow in the newsletter, we're just going to go through this in a little bit of a deeper dive. So a reading above 50, okay, 50 or above, signals expansion in the manufacturing sector of the U.S. economy. A reading below 50 signals contraction, but it's more important, in my view, to look at the trajectory of the PMIs, okay? And this is why it's important, and since I'm near my computer right now, if you look for my name in the chat, okay, it's gonna be highlighted in yellow, it'll say Walks Wall Street. Go ahead and click on the link, it'll say www.ismworld.org, again, www.ismworld.org, and that's going to take you to the December report. Now, if you scroll down, you could actually pull historical data going back 12 months. If you go to Yahoo Finance, you can go back and pull data, I think over 10 years. And what you want to do is you want to build an Excel model where you plot each individual ISM PMI result, right? So you can sort of make like a line plot, a dot plot. And what you can see is the business cycle in real time, essentially, right? So where are the PMIs going through a peak, right? Where is it getting a little bit peaky? And where are we going through a trough? And a lot of times what you could see is that the PMIs tend to lead GDP by about 6 months. And if you think about, how we, statistically speaking about the market, if GDP is positive, right, generally speaking, about 70% of the time, if we get a GDP print that's positive, about 70% of the time, the S&P 500 will also be positive. So as traders and portfolio managers, right, if we can try to predict the trajectory of the PMIs and the manufacturing sector of the economy, that could potentially lead us to a result of successfully predicting if GDP is going to be positive, and that will give us a high probability of market direction, right? So if we can get, and if we know the fact that 70% of the time if GDP is up, the S&P 500 is going to be up, well, then as we're making directional bets in the market, we can increase our probability or odds of success, right? So if you go ahead, click the link, scroll down about a third of the way, you can see last 12 months of manufacturing PMI. And it'll give you an average for 12 months, which the average is about 47.1. The low was 46 and the high was 49, okay? So if you look at the 46 reading, that was back in June of 2023, and now we are at 47.4. So I think, right, if I had to guesstimate, this is where the PMIs are kind of bottoming out here a little bit, and I'm expecting them to turn up throughout 2024. If you go all the way back to when the PMIs peaked at readings of 58, it was going from 58, 56, 50, and down, and the market sort of rolled over at that time. So besides the point, we'll do a deeper dive into that tomorrow. But today the S&P 500 pulled back about 38 points, down almost 1%, finished trading at 4,704. Now we are quite extended from the 50-day moving average. The 50-day sits at 45.23, so the market still is about 4% extended from the 50-day. And we were about 6% extended from the 50-day. So I think this pullback as of now is normal. We'll keep in tune with the volume there. If we go to the NDX, which is the NASDAQ 100, that was down 175 points today, or down about 1%. The 50-day moving average on the NASDAQ 100 sits at 15,811, currently trading at 16,368. And last but not least, the Dow Jones Industrial Average, or the Dow 30, is very extended from the 50-day. The Dow's 50-day sits at 35.4. We're currently trading at 37.43, and we were down about 284 points today. We'll quickly check on crude oil before we get the stream started. Crude is still below $75 a barrel, trading currently at $73.13. We'll look at the CBOE Volatility Index, or the VIX. VIX caught a little bit of a bid today, up about 2 points to 14. However, the 50-day moving average is at 1450, so maybe we will hit the 50-day and roll back over. All right, everybody, let's go ahead and get started. Just a quick reminder to all of you, tomorrow is Thursday, okay? Which means we will have the first ever 2024 Behind the Street newsletter will be published tomorrow right at the closing bell, okay? I don't know if the QR code still works, but if you want to make sure you're signed up to receive that, go ahead and scan the QR code on your screen, or just type !news, NEWS, in the chat, and you will be signed up to receive it. We're going to cover a lot in that research piece. If the QR code doesn't work, just click the link in the description. That'll take you to our Substack, and we are going to cover a lot. Okay, it's going to be a more lengthy piece. We're going to cover global macro, U.S. equity markets, do a complete breakdown of S&P 500 historical returns during presidential election years. Okay, I think you guys are really going to like a lot of this data. We go back, okay, so we've compiled data going back all the way to 1928. All right, so it's going to be interesting to see during election years, depending on if it was a Democrat as a president, Republican as a president, what were the average returns for the S&P 500 during presidential election years. We have all of that data compiled for you, and we will send that out tomorrow at the closing bell. So once again, go ahead, scan the QR code on your screen or type !news, NEWS in the chat, and tomorrow you will all receive that. Okay, let me go ahead and close up the laptop. I'll put my hat on here and we'll get started on the stream. Happy New Year, everybody. Just quickly let me know in the chat if the QR code is working, because I think it may have expired, and then I'll have to fix that at a later date. So, who knows? All right, cool. Hey, Tahoe is here, says Happy New Year. I see Sabrina Fair. Scott, good to see you, Scott. Welcome, welcome. Tariq Khan says Happy 2024. I think it will be a good year. Epstein list, Harvard, DEI, Iowa. In 12 days equals market going bull. Maybe. Hold on one second. All right, let me just get rid of the QR code for you guys. I don't know if it expired or not. We'll see. Anyway. All right, Lionel, good to see you. This is greetings from Melbourne, Australia. Stephen Bate is here. What's up? Sabrina Ferris, Tom, the QR code is expired. Yeah, I'll have to... I forgot to do that today. It was such a busy day. I'll have it for you guys tomorrow. RB, what's going on? John is here. The other John, Julius, welcome. Colton Manning, Mauricio. Who else we have? Sharon is here. Diana, DA. Yeah, it's good to see everybody. George. Yeah, it's going to be a very, very cold one tonight, to say the least. K Con, what's up? Says good evening from Cape Cod. Welcome everybody. So I haven't really been keeping tabs today on the weather. Now apparently there is a slight chance, I think there's two models that are kind of conflicting, but it is possible that Saturday we get a little bit of a snowstorm here in New York City. Now I don't know, in my experience, every time they talk about a major snowstorm in New York, the exact opposite usually happens. And when they kind of downplay the snowstorm, that's when we get hammered and rocked with snow. So who knows? I'm actually kind of looking forward to snow in the city. We haven't had any snow in New York, I believe, in over 700 days. So you never know. Maybe on Saturday night, we will be doing a live stream, checking out New York City in the snow. Colton Manning says, I was just checking the weather. It looks like it may be a little bit too warm. Got it. All right, well, we'll see. I hope it's cold. I hope it gets cold, because then we're just going to get a ridiculous amount of rain, and that's not going to be fun to walk around in the pouring rain. I'd much rather walk around in the snow. So Tahoe says we are going to get it in State College, Pennsylvania. Yeah, I think upstate New York is going to get it pretty bad. We'll see. We'll see. Now, there's a few things that I'm going to be writing about tomorrow, and a few things that we've talked about in general as we are here on Fifth Avenue. One of the things you'll notice, actually, as we continue on in the stream, the streets are going to look pretty empty in comparison to our previous streams, particularly during the holidays, right? A lot of the tourists have now gone home. The city is pretty empty, particularly on Madison Avenue, Midtown Manhattan today. The city was pretty dead. You can kind of see on the streets there's only a few groups of tourists. Tropical Days, what's up? Walter says greetings from Argentina. Thanks so much for joining us. So we were talking about extension from the 50-day and historical extension for moving averages, right? So what you're seeing in a lot of the leaders, particularly in the semiconductor sector, you're seeing a lot of these stocks pull back here, which I think actually looks pretty normal. Now, what you want to watch for is the reaction of many of these stocks around the 50-day moving average, right? So if you have very disturbing action, you know, right at the 50, stocks really aren't catching a bid at the 50, you know, they're just slicing right down below, that is a cause for concern. But if you start to see, particularly the indices, like the S&P 500, the NASDAQ, and the Dow, sort of catching a bid at the 50, kind of going sideways, well, that could potentially act as I would say, your first entry point right into the market as we've sort of built out the right side of this base. So we'll be watching for that. You know, I was doing some more research today about the specific sectors that tend to perform the best during election years. And those two sectors are financials, number one, and number two, energy. So I think I'm going to keep a running tab on the XLF and the XLE for this year. And as we've stated before, usually the worst performing sector in the market is technology during an election year, which is pretty interesting because prior to presidential election years, technology is actually the best performing sector. We'll talk about some reasons as to why that may be. Check out this car here. I wonder what brand that is. Hey, Sandra Dickinson, what's up? This is Hello Tom, good to see you. Welcome, Richard Vogel is joining us. Thanks so much for joining. Wow, look at this. Looks like this whole entire townhome is for sale. That's incredible, look at that. Let's actually take a little bit of a peek inside. I don't think we can obviously go in, but look at that. Wow. Imagine just walking into your house in the middle of Midtown Manhattan. That's incredible, isn't it? Maybe I'll actually schedule a preview of this home. Incredible. Yeah, DC 322's townhome for sale. Sarah's here, says, hey everybody, what's up? Someone says at least 10 million on the low side. Maybe. Yeah, I mean, the facade of these buildings are fantastic. Just fantastic. And you're right next to a very expensive restaurant. I love the big brownstone stairs that go up to a lot of these townhouses. I mean, that's really, you know, big wealth in New York. If you're able to afford a townhome in Midtown Manhattan directly off Fifth Avenue, it's pretty stunning. And your neighboring MoMA, the main art museum here too. This is 53 West 53rd. We sort of talked about this building last night on the live stream. This is the building that's just off New York City's Billionaires Row, but it's considered a Billionaires Row style building. You have great views of it from this townhouse that's for sale right here. White Glove Etiquette says that's beautiful. Yeah, I mean, this block is really stunning. It's right off of Fifth Avenue by the University Club. So if you Google University Club, New York City, you can see some photos of the ballroom inside the club. It's amazing. Now, there's no photos allowed in there, no filming. It's a very exclusive club, but the inside is stunning. It kind of reminds me of the inside of the Stephen Schwartzman building at the New York Public Library, where I was today, actually, by the way. I was inside the New York Public Library, Stephen Schwartzman building a little bit today, working on the newsletter that I'm going to send out tomorrow. That place, I mean, talk about an architectural marvel. It's right there. Absolutely stunning. Hey, Sally's here. Mary is joining us. Vinny, what's up? From Long Island, New York. Welcome, welcome. Let's take one more look at 53 West 53rd before we head over to Columbus Circle. Hey, Tiff M, what is going on? Says, hey Tom, just passed by the Conover. I see a lot of people have moved in already. Yeah. So I was actually gonna reach out to you. I will be at the Conover on Friday, and I will also be there on Sunday. So we sold unit THB and THH. They just closed about 2 months ago. So they have moved in. It was actually one family that bought both those townhomes. So I remember I was showing them around and they loved it so much. They're like, all right, we'll buy 2 of them. And I think they're gonna rent the other one out. I'm currently working a deal on 2B, which is the 2-bedroom, 2.5 bath unit that overlooks Conover Street. So your view of the living room, or from the living room, is looking right at the Widow Jane. We have an offer on it. It's a little low, so I'm trying to get them up. But if we sell that, we'd be 70% sold, which is great. You know, this project has actually exceeded my expectations a little bit. When we first took it on, I didn't know how much traction we were going to get on it, because you know, Red Hook is a little bit far away, but there's been a lot of traction. You know, from all of my listings that I have in Manhattan and in Brooklyn, the Brooklyn listings, particularly in Red Hook, by far get the most traction. I don't know what it is. I think people just want to be away from the craziness of the city. You know, if they commute into the city and then when they come home, they kind of want a little bit more privacy. But yeah, we've been having a lot of interest in Red Hook, Brooklyn, particularly at the Conover. So who knows, maybe I'll see you there Friday or Sunday. Hopefully you are doing well, and thank you for all your help this year. Hey, Optimus17, what's going on? Good to see you. Larry D says, Tom, that mansion you looked at earlier is listed at $56 million. Wow. I'm definitely gonna have to preview that. How many bedrooms is it? It must be like 6+. Now that reminds me, I think you guys actually brought this to my attention. Last year, I think Carlos Slim, who is the Mexican telecommunications billionaire, I believe he listed his New York City townhouse for sale. I forget what the exact listing was. Maybe one of you guys could look it up, but I know that he listed his home here in New York City last year. Maybe it was 2 years ago, but that was incredible. I saw some of the photos there of Carlos Slim's massive New York City estate, which was incredible. Hey, King of Florida says, do you ride a plane or drive a car from New York City or Miami? I don't think I could physically stomach driving from New York City all the way to South Florida. So I definitely do take the plane. Speaking of that, I just purchased my tickets to South Florida today. Speaking of inflation, airline fare, at least for me, has totally returned to normal. Like completely, which is good. Oh, it was almost a big bicycle crash there. I don't know if you guys saw that. I don't know if my camera was pointed down. But yeah, you know, before the pandemic, I used to pay like $77 for a one-way ticket from JFK to Miami, right? Then with all the inflation, all the craziness, it went up to like $225. And now I just purchased my tickets for $100. Not bad, like $98 it came with the tax. So, you know, factoring in inflation over 4 years, it's pretty much the same price. So that's good news. Anybody else experiencing the same thing? Have your travel airline fare come down at all? At least for me, it's come down. Jeanette says it was listed for a cool $56 million. This is the Steinway Tower here on Billionaires Row. Gary Carpenter, it's good to see you. Someone says yes, for sure, cheap tickets. Caitlin's is 24,000 square feet. Wouldn't have guessed that. That is massive for a place in New York City. Absolutely massive. For some context, wow, really? 24,000 square feet? Hold on, let me read that again. Yeah, Caitlin says 24,000 square feet. Wouldn't have guessed that. I would not have guessed that as well. You know, for some context, some of the massive ultra luxury apartments on Billionaires Row that we're going to walk past right now, for example, the entire 83rd floor at 157 that just sold for $31 million. The broker on that deal was Noble Black. He actually sits right next to us. His office is directly, his cubicle is literally directly next to mine. The Kirsten Jordan team. Anyway, he was on CNBC today. I don't know if you guys saw that. If you Google Noble Black CNBC, he was on Power Lunch today. I believe that's the show that it's called. And he was talking about the state of the New York City real estate market, talking about some migration trends from New Yorkers going to South Florida and vice versa. I think you'd like that. But anyway, for some context there, the entire 83rd floor of 157 is 6,500 square feet. So 24,000 square feet, I mean, whoa, that is a huge place. Huge place. I mean, that must span like 5 floors. Who knows, maybe I'll contact the broker and get a preview of the building. Maybe I can get some footage in there, because those townhomes are gorgeous. All right, so we just made a left on Billionaires Row. We're gonna walk under the scaffolding here a little bit all the way up until Carnegie Hall, and we'll get a look at some of these buildings. So. Let me actually pull over to the side here, just because we do have a lot of new viewers. You could see exactly what I'm talking about. Right here is 111 West 57th Street. This is the main, I should say this is the retail entrance to the skinniest apartment building in the entire world. Look at this. This is a view standing directly under it. Again, Steinway Tower. Now, as we turn the camera a little bit over to the left, you're going to see 157. So 157 West 57th Street. This was actually the first building ever to be constructed on Billionaires Row. It was completed in 2014. And the 83rd floor, the entire 83rd floor of the building, just sold. It was on the market for under 14 days. It was listed at $34 million. It's sold at 31. Not a bad deal. Not a bad deal at all. Hey, Richard Vogel says, Tom, did you see the street vendors that were removed from the Brooklyn Bridge? I did not. Did not see that. Although, now that I think of it, I do notice there was a lot more street vendors this year than I ever saw before. Not only on the Brooklyn Bridge, pretty much all throughout the city. Honestly. Democracy Forever says, hey Tom, New York City has 136 billionaires. Very impressive. Now, that would be an interesting data point to look up. Is New York City the city with the largest concentration of billionaires? Or is that London? I'm trying to think. Maybe somebody could Google that. But I think that's true. I think New York City has the highest number of billionaires out of any city. Which, look, you know, everybody complains about, you know, New York City being expensive, you know, dirty. But at the end of the day, I also think we need to be a little bit thankful for New York City for the following reasons. This is the Russian tea room right here. But in no other city in the world can you have such close proximity to the most educated, smart, driven, entrepreneurial and wealthy people in the entire world. I truly believe that proximity is power, and New York City is really a networking beacon in the entire world, right? So moving to New York City, paying the crazy rent here, I think in a way is worth it to build your network. So everybody, this building that we're looking at right now is 157, okay? This was the first building ever constructed on New York City's Billionaires Row, and it is also home to the very luxurious Park Hyatt, which I believe Michael Jordan actually stayed here this week, I think. So on the door number 1, we have the main entrance to the Park Hyatt. Door number 2, if you own a condo or you rent in the building, this is where you go. And it's my personal favorite building on Billionaires Row. It's developed by Extel, which is Gary Burnett's company. And right next to it is Central Park Tower, which is even taller and more luxurious. That was also developed by Extel. But the best-selling building on New York City's Billionaires Row is right here, the one with the gold top. That is 220 Central Park South. 220 Central Park South. Definitely has a different design, right? It's not one of those glass encased buildings. It's very similar to the 15 Central Park West, the limestone building, which was, constructed in 2008, I believe. Sales launched during the depths of the financial crisis, by the way. Think about how crazy that is. 15 Central Park West, we're gonna walk there tonight, was completed in the depths of the financial crisis. And it did great. It reminds me of that saying that ultra high net worth individuals never really go through recessions, right? Generally speaking, but it's kind of crazy. All right, this, everybody, is the very famous Carnegie Hall. Very beautiful. Unfortunately, it has all this scaffolding encompassing the facade, which hopefully it'll be down soon. Anybody been to Carnegie Hall for any shows or events? Hey, Dusty Cole is here. Good to see you. Crispies is number 1 New York, 2 Hong Kong, 3 Beijing, 4 Shanghai. Oh, okay, so you're talking about the cities with the highest number of billionaires. Interesting. So London isn't on the list. That in a million years. I mean, London is a huge financial capital. I would think London would at least make the top 5, right, of cities with the highest concentration of billionaires. Interesting. Hey, Scott says, which building did Ken Griffin buy in? So Ken Griffin owns 3 of the floors at 220 Central Park South. But this building where we started the stream, this is Harry Maclow's building. 432 Park Avenue here. That's where our office is, right at the base of that building. Got it. Chris says London is number 5. Understood. Now, I will say, you guys notice all this traffic here on 57th Street? 57th Street is a two-way street in Manhattan, right? I believe 57th Street, 34th, 14th Street, very, very busy streets. So I think one of the downsides, if you could even say a downside of living on Billionaires Row, you're living on a very busy street. Would you guys agree with that? Some people don't like that. Even if you're, 100 stories up in the sky, you're above the sound. Some people don't like living on a very busy street. So who knows? But if you guys are enjoying the live stream so far tonight, feel free to leave a like on the video and click the subscribe button if you're new. We do these live streams almost every day starting at 8:30. Now we're passing one of my favorite buildings, which is 180 West 58th Street. This is Alwyn Court. Look at that. Now my favorite thing about this building is the facade. Take a closer look at it. Hey, Lawrence says, hey Tom, it's my birthday. Glad to see you streaming tonight. Lawrence, very happy birthday to you, my friend. What a way to kick off the new year with the birthday. Fantastic. Wishing you nothing but success and a very, very peaceful life in 2024. But notice the detail on the facade here at Alwyn Court. It's one of my favorite architectural marvels in the city. Now, during the nighttime, it really doesn't do it justice, but during the day, it's quite incredible. So the Alwyn Court Apartments. It was built in 1907 and 1909. Awesome building. The detail is really incredible here. Hey, Yesterday 15 says, hey Tom and chat, good to see you, Yesterday 15. Thanks for joining us as we walk Central Park South / Billionaires Row here. Wow, look at this. This is a pretty unique shot of Central Park Tower, look at that. Hey, Leanne Rogers says, that apartment you showed? Oh, let me read the comment, sorry about that. All right, so Leanne Rogers says, that apartment you showed, you mentioned the University Club and the New York City Public Library. The architect who designed the mansion also designed the club and the library. You have a great eye. No way. Are you serious? Let me screenshot that comment because I'm gonna do some research when I get back to my office. Really? So the architect who did the University Club also did the New York Public Library. Wow. Yeah, I mean, they look similar. I wish I could take you guys inside the University Club. Unfortunately, there is no filming there. But you gotta see it. I try to show a little bit of it from the street. I mean, it really does resemble you being in the reading room at the New York Public Library. It's quite incredible. It's an incredible, incredible place. Hey, Go for Hokies says, did you know Mississippi has no billionaires? I did not know that. That's surprising. So one of the things I wanted to mention, now that we are in an election year, and one of the main themes for tomorrow's newsletter is going to be historical performance of the S&P 500 during election years, but we're also going to take this data and go all the way back to 1936. So we have a fairly sized data set, but you know, with these projections that we make, right, you'll see a lot of analysts that will say, okay, during presidential election years, on average, the S&P is up 11%. You know, how reliable is that data, right? Because the more data you have, the larger the data set, generally speaking, the better the results, right? Because you could back test it and it's more reliable. But since 1936, there's only been what, like 24, 25 presidential elections? So that's not a very large data set at all. Anyway, I still think it's important to look at it though. Now, what drives a lot of times what drives stock prices is not only monetary policy, right, in which we talk about from the Federal Reserve. There's two types of policy, right? You have monetary policy, which is totally independent from the federal government, right? The Federal Reserve, our good friend Fed Chair Jerome Powell. But then you have fiscal policy, right, which is dictated by government spending. Now, there was an interesting correlation. So if you look at the semiconductor index, right, the BlackRock iShares Semiconductor ETF, ticker symbol SOXX, right, the SOX. I believe the CHIPS and Science Act, right, that was signed into law by President Joe Biden, I believe that was signed into law on August 9th of 2022, right, which provides, I mean, just massive stimulus to the semiconductor sector. In 2023, the semiconductor indice at one point was up 65%, right? That's the indices. So if you look at some of the individual names like Nvidia, things like that, I mean, those individual names could be up 100%. But since that CHIPS Act was passed, right now, in terms of today's trading day, including the kind of correction we had over the past 2 days, it's up 32%. So as you kind of look forward into an election year, I think it's important to say, okay, should the Democrats lose, and this is totally apolitical, by the way. We're just trying to talk about the financial markets, but should the Democrats lose, right, and a Republican wins, I think that you should start to think about what the fiscal environment would look like, right? What government spending is going to look like? What pockets of the market, what sectors are governments likely to stimulate and spend money, right? Same for the Democrats. Okay, if Joe Biden wins again, right, again, not being political, just talking about the markets, but if Joe Biden wins the election in 2024, what is the fiscal environment likely to look like? Because that provides tremendous stimulus, or not, depending on what the environment is, to specific sectors in the market. So as you're trying to create, a sound investment thesis, those should just be a couple things that you should look for, right? Because there are correlations, right? CHIPS and Science Act was passed in 2022, and in 2023, at one point, semiconductors were up 65%. Since the act was passed, the SOX has a gain of about 34%. So it is something to think about. Dusty Cole, good to see you. What's going on? Boo Boo says we need to taff the billionaires. Tahoe, what's up? TK Porsche is speaking fiscal policy. We passed 34 trillion national debt today. Congressional fighting over extending the limits begins any day now. Yeah, I think if one thing's for certain, we could always count on Congress to spend too much and to spend more than we should. I think that's a certainty, unfortunately, which is wild. But if you guys want to read, this is gonna be a very lengthy newsletter tomorrow, right, for the beginning of the year. And if you want to receive that, just type !news, NEWS in the chat, and the Nightbot will drop the link to our Substack. Okay, so every other Thursday after the market closes, we put out our free equity research piece, and we're going to be talking about historical performance of the S&P 500, back-tested all the way to the 1930s during presidential election years. I think it's going to be a pretty fun piece and very, very interesting. DC322 says, yeah, we may have a potential government shutdown in the next couple weeks. I don't think so. I mean, what do you guys think in the chat, right? So I'll give you sort of my perspective on the whole shutdown stuff. The news is so repetitive and so cyclical. Does anybody else feel that? If you pay attention to the news, like the financial news, long enough, you start to get a pattern, a clear pattern of the repetition in the headlines. And I've actually saved some of these and archived them. Anytime I feel as if it's a headline I've seen before, I buy the paper and I save a physical copy at my house. And, the same headlines are repeated all the time. Government shutdown, it's not gonna, we're gonna go into a government shutdown, the market's gonna crash, this and that. But then the same thing happens every time. It comes down to the final hour, right, the last 30 seconds, and then we extend it, and we pass something. And the government doesn't shut down, we spend more money in perpetuity forever, and then the cycle repeats itself. And then in a few months, we go into the same situation. The Democrats fight with the Republicans fight with the Democrats, it gets extended, and then we spend more money. I just feel it's very cyclical. I don't know, am I going crazy, or do you see this as well? Anyway, We are now standing right here at 59th Street, Columbus Circle. This is a very unique view of New York City's Billionaires Row. You can see Central Park Tower, 220 Central Park South, and the very, very top of Steinway Tower. Flybreads is no, I have been seeing that. Willis is not going to happen. It's an election year. Nemus is Tom. I believe it's a smoke screen. Yeah, like kind of like a distraction maybe. DC 322 says the economy will be down a bit, but not much of a big fall. Maybe. Boo Boo says the debt is too high. I agree with you 1,000%. You know, Stanley Druckenmiller describes it as Congress spends like drunken sailors. That's his sort of catchphrase he always says. Anyway, everybody, this is the Deutsche Bank Tower, or Deutsche Bank Center. This used to be called the AOL Time Warner Center. But now it is the Deutsche Bank Center. So if you remember 2 days ago, we were doing our Lower Manhattan live stream where we were looking at a lot of new development product in New York. We were looking at 130 William, we were looking at 1 Wall Street. We also passed by the old location of Deutsche Bank, which was 60 Wall Street, that is now completely vacant. So that was the last standing investment bank on the physical street of Wall Street. They shut down over there and they moved into the brand new, you know, better location, old Time Warner Center. And this is a big trend that we've been seeing in New York, right? Moving away from older product into better product in Midtown Manhattan, near Park Avenue, in and around, you know, Times Square North, Columbus Circle, and the Hudson Yards. Stephen Bates says all the debt is fake. Watch the debt charts. They keep ticking the exact same speed. Interesting. Elias, good evening everybody. What's up, Elias? Welcome. We'll quickly do just a brief walk right here at the Mandarin Oriental Hotel. This is a 5-star luxurious hotel. And they've also opened up residences. So right on the corner of East 54th Street and 5th Avenue, I believe, is the brand new Mandarin Oriental residence. I believe we walked past there last night. I'm not too sure how that's selling. But anybody stay at the Mandarin Oriental? In 2 weeks, we will be in Brickell. We will be doing a live stream from downtown Miami and Brickell. And I can guarantee you we will be walking over the bridge to Brickell Key. I'm not sure if anybody is familiar with South Florida or Miami. But if you walk from Brickell over the bridge to Brickell Key, that is where the Mandarin Oriental location is in Florida, in South Florida, which is very, very nice. But I'll see if I can quickly take you guys inside the new Deutsche Bank Center. We'll see. Eric says free healthcare for illegal in California. I don't know what that means. Abdullah, what's up? Thanks for joining us. Hey, CWJ says the economy is great. Oops, sorry, I lost your comment. Let me go back. The economy is great, nachos are great, Trump is. Hey, Marcia says, Tom, you're completely right. Same talk every year, never a shutdown. Yeah, it's just the headlines. I mean, the headlines get very repetitive and cyclical. But the reason why they do that, right, you'll notice the kind of headlines that always repeat are the negative ones. It's never anything positive. Because, you know, you have to look at the, let's cross, and I want to go on the Upper West Side of Manhattan tonight. So actually, let's go over here. But the media's job is to sell fear, right? Because if you look at the data, what drives more clicks? Is it, oh, the Democrats and Republicans are going to get along and pass a bill and everything's going to be fine? Or we're going to have a looming government shutdown, nobody's going to get paid, people aren't going to be able to pay their rent, and let's go interview a bunch of disgruntled government employees, and they're going to tell you a gloom and doom horror show, right? Well, yeah, it's going to be that. The government's going to shut down, the world's going to end, nobody's going to get paid, everybody's going to be late on their rent, and everybody's going to get evicted, right? That is the story that's going to drive the headlines, drive the clicks, drive the advertising. This is one of the things that I'm going to include in our research piece that I send out to everybody tomorrow. Because notice a few of the major narrative busters, just by following the overall trend of the market, right? And these are some of the stories we've been covering as well, but it appears that they haven't really materialized in a big way. In some ways they've already materialized, and I think we are through the worst of it, and we're actually coming out on the other side, which may be a controversial opinion, but I'll give you the first one. A lot of people, right, have been forecasting this commercial real estate cataclysmic meltdown, right? And I've been one of those people who've been covering that and said, look, there's going to be a lot of pain in commercial real estate, particularly office. And if you look at some of the deals, there actually have already been a lot of that pain. You're seeing a lot of foreclosure auctions. And again, maybe I'm a little bit too early. Nobody can call a bottom, right? And nobody should really try to. But if I had to say, I think we're through the worst of it, particularly if the Federal Reserve just keeps rates where they are, right? Currently, the Fed funds rate is 5.25% to 5.5%. We had the Fed minutes out yesterday. Nothing new, right? But it sort of signals that the hiking cycle is over. And even though we may not start to cut rates, we may just, the Federal Reserve may just leave them here at 5.25% to 5.5%, right? So if debt stays where it is, right, and just doesn't go up anymore, right, the bond market has caught a little bit of a bid, well, I think deals can still be done there, and it doesn't have to be an Armageddon. One of the ways, I'll cut right to the point, that you can kind of see how the markets are forecasting, like private equity to open up again, is if you look at KKR, right, number one, and if you look at Blackstone. So look at ticker symbol KKR, right, on your Bloomberg terminal or MarketSmith or TradingView, and then look at ticker symbol BK, I believe, ticker symbol BK. So KKR is a private equity giant, and it's now trading close to all-time record highs again, and it's starting to form a handle here at all-time record highs. So again, nothing is an exact science. Real quick, this is the Trump International Hotel and Tower. Very cool, right? Look at that. I've always said that the apartments at Trump International Hotel and Tower overlook Central Park and Billionaires Row a little bit better. I think they have a little bit better exposures, in my view. I don't know. Maybe we'll take a look there a little later. But again, the market is usually forward-looking by 6 months. So as you've had this rally in some of these big private equity names like KKR, Blackstone, to me that says, okay, maybe the worst is behind us. Maybe it's time to change the trend a little bit and not, go on relentlessly with the fear porn. I could be totally wrong, right? Nobody can call a bottom, but the market, at least as of right now, right, could the market be a little bit extended, which I think it is, yes. But a normal correction to the 50-day and then go, a lot of these individual stocks are kind of forecasting a change in the tide. All right, I want to point out this building to all of you. Right here, this building right here, used to be, and still is, by the way, one of the most desirable buildings in all of New York City. This is 15 Central Park West. It is nicknamed the Limestone Building. And this is really one of the first, major buildings that were developed to appeal to billionaires, right? Ultra high net worth individuals. There are a ton, and I mean a ton, of big names who live in this building. From I believe the former CEO of Goldman Sachs, Lloyd Blankenfein, has a place here. Some big private equity giants have places here. And speaking of the Yankees, I'm going to have a Yankee reference in tomorrow's newsletter. I believe Alex Rodriguez used to have a place in there too. Hey, Janet, thank you so much for your $2 donation. I appreciate you so much. Thanks so much for being here. Scott's expectations for a lower cost of capital sent PE higher. Now, Scott, here's one thing I was thinking about. And again, it kind of goes back to what we were talking about the Fed doesn't necessarily need to cut rates. If we just leave rates where they are here, and if we continue to have earnings increase, these stocks will grow into their PEs, right? And assuming further down the line, if the whole AI narrative really materializes, if artificial intelligence could just expand margins across the S&P 500 by about, 2 percentage points, where do you think the S&P is going to be there, right? So, I don't know. If you look at the ISM PMI report that came out today at 10 a.m., and you scroll all the way down to where it says respondents, which I think is one of the most important parts of the report. We're going to head towards Lincoln Center now here. Some of the respondents have said exactly that. You could look at the excerpt for yourself if you go to the Institute for Supply Management PMI report today. They said that many business leaders are expecting that the Fed is done with their hiking cycle, which means that as they approve their budgets for this year, right, which they're going to be approving them pretty soon, they're more likely to open up additional capital expenditures, right, to invest in their business, grow their manufacturing operations. That was one of the main reasons why, PMIs were down, is because interest rates went up. And when interest rates go up, you kind of see manufacturers not taking on debt, not investing in their business, not expanding their operations. So maybe the worst is over. I don't know. I'm trying to keep an open mind. We'll see. Scott's new orders were the softest component of the numbers today. They were, but I feel like it's December and a lot of the holiday ordering is done. I don't know what the historical trend on that is. I could probably pull some of that data on Yahoo Finance, but what is December usually the softest number for new orders? I would assume so, right? You would think going into Q4, like the tail end of Q3, new orders should ramp, and then they should decelerate into the end of the year. But I don't know, but I did see that as well. That was a bit concerning. Prices were down, which is good. Okay, everybody, this is pretty cool. We haven't been up here in a long time. This is Lincoln Center, all the way in the distance. Maybe we'll head over there. And this hotel is Hotel Empire. Quite famous, right across the street from Lincoln Center. And then you have the very famous PJ Clark's. Anybody a fan of PJ Clark's here? 456's PMI goes down because there's no demand. Cloud says, what's going on in the market? Nina says, exactly my point, Tom. Via the Fed interest rates. Oops, chat's going too fast. Let me scroll back down. We all just need to chill out and see what happens this year. Hey, NAV405, what's up? This is good evening, Tom. welcome. I'm just trying to scroll back to the top to read some of the comments I missed. Apologize. Man, it's getting cold. 64th Street, Broadway, Lincoln Center. Hey, Ken says, I'm concerned about war coming soon, not a shutdown. War coming soon. We're in it, pal. War coming soon. I mean, war is raging all around us. Right? I mean, respectfully. You know, not trying to be condescending, but I mean, we have war raging in the Middle East. I mean, that meat grinder is still going on. Not to get political, but that war is total BS. And we got war raging in the Middle East. So worried about war starting. We're in the thick of it, my friend. Okay, we are walking a little bit further up onto the Upper West Side of Manhattan. And we're going to see the main TV studio here. Hey, son, happy birthday to you. Thanks so much for watching, and hopefully you enjoy your birthday. Thanks so much. This is where I saw that crazy car accident not too long ago, by the way. Love is Kind says, Tom, did you watch Leave the World Behind? I have not. I don't know what that is. Ken says, we as a nation haven't declared war on anyone technically. Yeah, not technically, but I mean, I think it's pretty apparent. Hey, Raj Rupani, what's going on? Says, Happy New Year, Tom. Any thoughts in the new year? A strategy of either dollar cost averaging versus lump sum investing? Well, I can't really advise on that because I'm not an advisor, so I kind of have to be careful. But generally speaking, right? In a retirement account, right? If you have like a 401k, IRA, something like that. Excuse me. What I personally do in my retirement accounts is dollar cost average into the S&P 500. In my long-term retirement account. This is the main TV studio of Eyewitness 7. It's kind of cool to see it, isn't it? It's right here just north of Lincoln Center. It's so cool. You can kind of look right in. But, you know, there's a really good, Raj, there's a really good book about that. It's called The Little Book of Common Sense Investing. That's one of my favorite books on the market. I'll say that one more time. It's a very easy read too. You can go on Amazon and order the book used for like $3. Literally. The book is called The Little Book of Common Sense Investing. And the book is by Jack Bogle, right? Or John Bogle. Unfortunately, he passed away, but I would argue that John Bogle did more for the retail investor than anybody on this planet, in my opinion. And the reason for that is because he essentially noticed how, you know, back in the day, the mutual fund industry was really, I mean, just fleecing investors, just absolutely fleecing investors because the fees were so egregious. You know, it wasn't uncommon, you know, if investors wanted to, you know, buy into a mutual fund, they would have to spend like 5% on the front end. They're called load fees. So they would hit you with a 5% front load fee, a 5% back end load fee if you wanted to sell. And then they would charge you like, 200 basis points per annum just to manage the money. So if you underperform the market, right, and you didn't beat the S&P 500, you still have to pay a crazy amount in fees to the mutual fund managers. So, Jack Bogle, he essentially said, who's the founder of Vanguard Group, by the way, great guy, God rest his soul. He essentially said, what if we can just create a very low cost index fund, ETF, that will allow the general populace to own a piece of America, right, at very, very low cost. And now you even have some of the S&P 500 ETFs that have no fees, I believe. I believe Fidelity has an ETF that tracks the S&P 500 that has no expense ratio, 0 fees. So I think it's a great product. Chances are if you have a 401k or something like that, you are probably invested in some sort of an index fund. That's why I always say, and I can't advise on anything, but I always say, if you've been at your company, this is the Apple store at Lincoln Center. But if you've been at your company, your current company, for over 10 years, and you have a 401k plan, you should definitely do an audit of that, in my view, because a lot of times, particularly if these are the older plans, a lot of times they're called end date funds or target date funds. The expenses can be very astronomical. In my view, right, and this isn't, I can't give advice. In my view, today, you should not be paying more than 1 percentage point per year in management fees. And even that is a little high. I even think 1% a year is very high. So you should go do an audit of your 401k. You should see what it's invested in, and you should see what percentage of fees you're paying. Because a lot of people just don't know. Oh, is this a Lucid? Look at that. This may be the first Lucid we've ever seen live on the stream in Manhattan. Yeah, but anyway, just do a quick audit of your 401k and, ask your HR person, what is the expense ratio? What percentage of fees am I paying on my money invested? And if they tell you 3%, you should breathe fire to say that's ridiculous and get it down to under 1%, because everybody's under 1% now. I'm not too hot on that color though, guys. What do you think? It's kind of like a maroon color. I don't know about that. Hey, Joel PM. So speaking of employer 401ks, also research your vesting schedule. Agreed. That's also very important if you work at a tech company, particularly, or at a startup. A lot of the times, your compensation package, if you're working at a tech company, particularly big tech, will be in RSUs. Now, RSUs stand for restricted stock units. So let's say, for example, you work at Facebook, right? And you have a $150,000 salary. Now, a lot of those people at Facebook make over $500,000 a year because of the equity that they have in the company with options and their RSUs. If Facebook goes up 70% in a year, you're gonna be feeling well. But you have to, know when you're allowed to sell those, right? Those restricted stock units. It's a good point, Troy. Cape Cod Saris. I call the color Merlot. Scott says you can look at my car, but please don't touch it. Hilarious. I wonder where he charges that, right? There's no street charging. Hey, Ryan Beck says evening all. Good to see you, Ryan. We were just having a conversation about historical market performance during election years, and also about fee income on Wall Street. Zach Drew says EV was always more costly. They were the first vehicle back in 1900. Interesting. Bill's Lucid has amazing engineering for them to survive. Someone bigger needs to pick them up. You think Apple? Huh. Very cool. Oops, let me all right, sorry, just making sure. Yeah, Ryan Beck says, I heard somewhere the S&P normally sees 16% in an election year. Yeah, it's usually around 11%, you know, give or take. A lot different than the 24% we saw last year, right? And usually the sectors that perform the best are financials, so the XLF, right, the ETF for the financials. And the second best performing sector is usually energy, or the XLE. I don't know why. I don't see the correlation there. The worst performing sector is technology, which is usually the best performing sector leading up to an election year. However, I think things are changing a little bit. I think it really has to do with fiscal policy, which we sort of talked about later or earlier. The Chips and Science Act that was passed back in 2022 by the Biden administration. You know, the or the SOX, SOXX, was up about 65% in 2023 and up about 34% since they passed the bill. So I think government spending is going to play a big role. So should the Republicans win the office in 2024, you know, their claim to fame, supposedly, you know, I'm using air quotes here, usually their claim to fame is, you know, reduce government spending, things like that, which isn't always the case. But in the newsletter that I'm going to send out to everybody tomorrow, we actually did a breakdown of historical performance, not only in election years, but in transition election years. So for example, how does the market perform a year after a Democrat is in office and then a Republican gets elected? And how does the market perform a year after when a Democrat is president and they get reelected? So we tried to do a deepest dive as we could into those data sets, but again, you only have so many presidential elections to work with. I think there's been 26 since 1926, something like that. Hey, Ryan Beck, thank you so much for, wow, 12 months. Crazy how time flies. I appreciate your support. Thank you for being here and wishing you a Happy New Year. Crazy, 12 months. How many of you have been watching for a year? That's wild. I think we started these streams over 2 years ago now. It's kind of crazy, right? Hey, Scott says residual fiscal stimulus likely explained absence of a recession in 2023 despite 500 basis points of rate hikes. That's a good point. And you're probably right. You know, not to get too political, but, you know, during the Trump administration, we spent more than ever before. Now, obviously, why was that? If you ask the question why, well, we had something called the Big C, right, that needed to be dealt with. But if we're just looking at the facts, right, I mean, the Trump administration spent like crazy. Now, we understand it was COVID, I get it, but that amount of fiscal stimulus being pumped into the economy while you had monetary stimulus being funneled into the economy, I mean, that was like kerosene on a bonfire, right? So, you know, how long do those residuals or those tails last to make themselves work their way through the economy? Well, apparently a long time, right? And I think a lot of that money found its way into money market accounts. So one of the other things we talked about, if you go to the Fed website, or the St. Louis Federal Reserve website, I want you to take a look at a historical chart of money market balances in the US. As of right now, we just hit a new all-time record high as we're looking at the Trump International Hotel and Tower. We currently have about $6.1 trillion in essentially liquidity or cash on the sidelines in money markets, right, that are accruing and growing at about 5%. So that's a lot of dry powder on the sidelines too, should we have a correction in the market. I shouldn't say should, I should say when, right? As sure as the sun comes up tomorrow, the market's gonna pull back, have a normal correction, but who's gonna be there to buy that, right? There's a lot of dry powder on the sidelines. So okay, let's go back down. We'll go down Broadway by the old Ed Sullivan Theater. I shouldn't say old, I should just say the Ed Sullivan Theater. I think this guy's going the wrong way, down a one-way street. Yeah, I think he just went the wrong way. See, that's why you gotta watch it in New York City, right? You always gotta have your head on a swivel. Huge box truck, probably from out of town, just went down the wrong one-way direction. I just want to show you all something real quick because we do have a lot of new people here. We'll take a little bit of a detour from the field trip. So if you go to the little plaza here at the Trump International Hotel, look at how cool this is. You have the Michelin star restaurant. I believe it's pronounced Jean George, I believe. You can see all of the Michelin star chefs working in the open kitchen here. Isn't that cool? Here, I'll take you around the other side. You can see a little bit better. Now, if you stay in the hotel, the room service is from the Michelin star restaurant, which is very interesting. You can kind of see the pastry chef in the window there. Isn't that cool? Not a lot of people know about that. So the dining room overlooks Billionaires Row. Let's head down through the, we'll go down the other way, through the barricades. But if you guys are enjoying the live stream so far tonight, feel free to leave a like on the video and click the subscribe button if you're new. We do these live streams every night starting at 8:30. Hey Sharon, this is Tom. Have you heard about the noise detecting cameras? They're supposed to ticket cars making excess noise. I heard about that from a YouTube video I watched by Cash Jordan. I think he does a better job reporting the local news than a lot of the local news stations. I'm not being mean. I just think he does a really good job at it. It's more entertaining news, I think. But I heard about that. I don't know how they're going to police that. So the cameras are going to be able to take your photo, right? If you're making excess noise, if your muffler's too loud or you're honking or something like that. I don't know. I don't have a car, but I feel as if people are going to revolt on that one, which is a good segue. You guys see this post here with all these cameras? So there's cameras sitting right here, right as you enter Central Park West, but there's also a set of cameras over here. Now these are the congestion pricing cameras. So in New York City, we're a little crazy. I'm totally against the congestion pricing. Some people are for it. I respect everybody's opinion, I'm telling you mine. I'm totally against the congestion pricing. And if you drive south of 60th Street, they're going to charge you a toll just for driving in Midtown Manhattan. I think that's absolutely ridiculous. Again, some people are for the congestion pricing. I am not. I think it's a tax on the middle class and the poor working New Yorkers, but that's just me. Well, I got to plug my phone in. It's getting cold. I mean, that's going to add another, $2,000 a year to people's budgets. People are already living paycheck to paycheck, and now you're just going to tax them again just for trying to get to work. And some people will say, well, then they should just take the subway. Well, not everybody can take the subway. And what about all the small business owners, like the HVAC people, the plumbers, the, handymen, the mechanics, that drive in on their work trucks to fix all your stuff, right? Your little apartment on Central Park South. Who do you think, fixes the HVAC in there? Who do you think, comes to redo the plumbing or the electric? It's working people that have to do that have to drive to you with their tools, right? So you're just gonna, bang them with the toll every time they come in from New Jersey or Long Island. I think that's kind of crazy. But anyway, because at the end of the day, ladies and gentlemen, at the beginning of this live stream, somebody brought up the fact that New York City has the highest concentration of billionaires. The highest number of the world's billionaires live right here. They don't care about the $10 or the $15. I don't even know how much it is. If it was $75 a day, they wouldn't care, right? I mean, it's not even a rounding error for them. They'd get driven around in their black cars and the chauffeur. It matters to you. The regular working people that are just trying to make a living, they foot the bill, right? They feel the pressure of it. That's the problem. So, again, not to go on too much of a rant, but I just think it's unfair for the middle class New Yorkers, in my view. Wow, Sam says it's going to be $23. Whew. That's steep. $23 every day. I think that's almost as much as what the George Washington Bridge is, I think. How much is the George Washington Bridge nowadays, if you want to drive over that? I think the George Washington Bridge is now 20 bucks. Someone says, what happens if you take an Uber? Will there be an extra charge? There'll probably be an extra charge, right? I mean, think about it. If you're a taxi service like Uber and Lyft, obviously you're probably not going to have to pay the fare every time you cross 60th Street. They'll probably only bill you once a day, but Uber is definitely going to pass that cost on to the consumer, right? So, if you think about, this congestion pricing, some people say, oh, well, I don't have a car, so I'm not going to have to pay it, so I don't care. Well, you're going to pay for it inadvertently, because do you order Uber Eats? Do you take Ubers right around the city? Do you have an electrician come? Do you have a plumber come? Do you, have a housekeeper that comes, right? Chances are, right, if your plumber comes to your house and he has to get there by car to bring all his tools, well, he's just going to charge like a maintenance fee. He's going to be like, okay, here's like a convenience maintenance fee to tack on to my $200 bill. I'll just, have the customer pay the congestion fare. So businesses always try to pass on costs to consumers, right? Businesses are never going to absorb those costs. It's always a pass-through. So I guess inadvertently we'll all be paying it. Anyway. All right, now we are standing directly outside the Central Park Tower. We have a very unique view of 432 Park Avenue in the distance. Man, this thing is crazy tall standing directly under it. It's incredible. But I want to show you guys the Ed Sullivan Theater. So let's go here and around, just because that little strip of Broadway has some no good stuff going on. Hey, Joan K is here. What's up, Joan? Good to see you. Thanks for joining us. You know what? I almost forgot. So we were talking a little bit about the narrative busters, right, of this year, and how, you know, fear really sells the most in the media. You know, let's take a look at some of the home builder stocks, right? Like Pulte Group, Taylor Morrison Home, essentially just the entire new home builder sector in general. I think KBH is the ETF for home builders. Home builder stocks, right, they're pulling back a little bit to the 50-day, but generally speaking, they've been acting really, really well. Home builders have been acting phenomenal. And one of the reasons why I think this, real quick, this is the Carnegie Hall, very iconic. Unfortunately, you have all that ugly scaffolding here. But if you think about the high interest rate environment, right? You've probably watched millions and millions of those fear porn YouTube videos saying the housing market is going to collapse. It's going to be the next 2008 and worse. And obviously, again, that's fear media. It drives a lot of clicks. But the reality is 2023 was the best year on record. The best year on record for home builder stocks. And I think one of the reasons for that is because as interest rates went up, we came off a decade of artificially suppressed interest rates, or ZIRP, right? ZIRP, zero interest rate policy. So everybody who bought a home over the past 12 years, they're like, I have extremely low interest rates. The prices of housing is elevated. There's no way I'm going to sell my house, give up my extremely cheap rate just to go back into the marketplace to compete for poor product, right? So there was not a lot of inventory on the market. So where does the inventory come from? It comes from the home builders. And home builders margins, right, as we've been talking about on the channel, margin compression wasn't as bad as I expected this year, right? There was some margin compression, but there was actually more margin compression in like the EV space, in auto OEMs, as opposed to home builders, which not a lot of people would have thought that, right? Prime example, take a look at Tesla, right? The margin compression on Tesla this year was insane. Not so bad with the home builders. Okay, this is the Park Central Hotel. This recently went under renovations, I believe during the pandemic. You'll see what I'm talking about, the lobby. The lobby is pretty brand new. Four, 5, 6 is Hey Tom. Home builders have been buying down mortgage rates. I think as rates go down, they will have more competition. That's probably the comment of the night. That is such a good point. That's a phenomenal point. So home builders, right, new homes, generally speaking, they have more wiggle room to negotiate. That's probably another reason why resales were down significantly year over year. You know, if I'm reselling my house to somebody else, right, or if I'm reselling my condo to somebody else, am I going to structure a deal to say, hey, I will pay the transfer taxes, I'll pay the mansion tax for you, I'll throw in 12 months of common charges, and I'll pay a year's worth of property taxes? No, of course not. I don't have the firepower to do that. But if you're a massive institution, like Taylor Morrison Home or, you know, Toll Brothers, Pulte, or whatever, right? You know, you could say, okay, we'll buy down your interest rate. We'll pay, you know, 2 years worth of real estate taxes for you to get the deal done. So that's a really good point. There's more negotiability. Is that even a word? I don't know. I guess we'll just go with it. There's more room for negotiation in this current market in new development as opposed to resales most of the time. That's a very good point.
Don't worry, Medicare covered.
Oh, this is a cool view. Guys, look at this. I'm actually going to zoom in on One Times Square. Let me know how this comes out in the chat, but if you look directly in front of you, right here, this little ball in the distance is the New Year's ball that they dropped on New Year's Eve. It's kind of cool. We could see it all the way from up here. Hey, Patrick D is here. What's up, Patrick? Forward Go says New York City approves new measures for citywide noise cameras to crack down on loud cars. I just don't know how they're going to enforce that, right? Because, like, let's say, for example, you know, I'm driving my car and I'm in a big traffic jam, right? And I'm going down Madison Avenue and I have a car next to me that has, you know, no muffler on it and it's making all this noise. It's so obnoxious. How is the camera gonna know who to bill? If there's a big traffic jam like this, how are you gonna pinpoint which car that's coming from? I feel like there's gonna be a lot of like misbillings with that. I don't know, maybe the technology is so good that they can. However, I don't know. I just think New York City needs to cool it on that stuff for now, right? We're just starting to see the city come back, right? We're just starting to see people feel comfortable coming back to the city again. You don't need to do additional things to piss people off, right? You have to kind of know how to play your cards, right? So if you're going to do all that crazy stuff, at least let the city come back to 100% occupancy again before you start, you know, deterring more people and getting people more agitated. That would be my advice to the mayor. This is the Sheridan, New York. Go forward says the vehicle sound is over 85 decibels. TK Porsche says I would argue loud cars are a minor annoyance. The abundant, overwhelming trash the city should focus on, 100%, my friend. 1000%. The city should focus on what matters, like fixing all the garbage all over the place. Like when it gets windy in the city and it hasn't rained in a long time, you see all like the trash that's, you know, miscellaneously scattered all over the streets. Here's another piece, right? You kind of just get used to it. Well, when it hasn't rained a lot in the city, and then when we have a very windy day, you quite literally have these trash tornadoes. I'm not exaggerating. Like you see these huge trash tornadoes. Like here's an example. So you have this bag here. You have another couple papers here. You know, scraps here, cigarettes. It doesn't seem like a lot walking through it, but on a windy day, all this stuff is blowing right in your face, right? I mean, here's more trash here. I mean, it's just trash everywhere. So yeah, I think the city should focus on that as opposed to people honking too much. right, this is 787 7th Avenue. This is the French investment bank, BNP Paribas. And a few years ago, there was, unfortunately, a helicopter crash right on the top of this building. And it freaked a lot of people out, and they evacuated a lot of these buildings in and around 7th Avenue. And unfortunately, the pilot of the helicopter passed away. Thank God, you know, the helicopter didn't crash all the way down to the street level. That could have been even more disastrous, but apparently it was a very cloudy day in Manhattan. I remember it, I was at work at 1166 Avenue of the Americas. And I don't believe he was clear for takeoff. And then you had a massive, you know, rainstorm come in. And unfortunately, he couldn't navigate where he was going, and he crash landed right on the roof of the BNP Paribas, which is terribly heartbreaking. Hey, Sunshine NYC, what is going on? Happy New Year to you. Later, right? And obviously the piece of Wall Street history that we always talk about right here at the end of the block on 7th Avenue is Barclays, which is the British investment bank. But it didn't always used to be Barclays. This used to be Lehman Brothers. So if you've watched those CNBC documentaries on the Great Financial Crisis, and you see those, you know, pictures, those photos, those videos of a lot of the investment bankers coming out of the revolving doors with boxes and boxes of stuff, because they've obviously all been laid off because the bank went under. That was filmed right here, right on the corner of 7th Avenue. We'll walk directly in front of the door, but now this is Barclays. Yep, right here. So if you go back in the archives on West 50th Street and 7th, you can see a lot of the old Great Financial Crisis photos of bankers walking directly out these doors, getting their pictures taken. Obviously because the bank collapsed and crashed the world economy, essentially. Scott's, this is Dick Fold still there. Now, I don't know what he's doing. He's probably on a beach somewhere. Now, the craziest video, did anybody see the video of Dick Fold way back in the day? I think at a Lehman Brothers shareholder meeting, where he was talking about a lot of the short sellers on Wall Street were selling the stock short. And he kind of goes off on this like very erratic rant in front of everybody. And he's like, you know, the short sellers really don't upset me at all. He's like, the only thing I want to do is rip out their hearts and eat it before they die. And it was kind of like everyone was like awkwardly laughing, like, what? I mean, he was an intense guy. Very, very intense guy. But yeah, this used to be the old Lehman Brothers right here. Hey, Hawaii, what's up? Welcome to New York City. We're checking out Times Square North. Now that it's not too crazy, a lot of the tourists have vacated the city, right? Because holidays are over. Reality is setting in here a little bit. Everybody's going back to work. Let's see if I could zoom in on the ball one more time. This is not a bad shot, right? 2024, Happy New Year. Let's see the ball at the top of One Times Square. But I do have to go back to the office, so let's go ahead and cross the street and head back to the east side of Manhattan. This is going to be crossing by Radio City Music Hall. But if you guys are enjoying the live stream so far tonight, feel free to leave a like on the video and click the subscribe button if you're new. We do these streams every day starting at 8:30. And just as a quick reminder, tomorrow will be the first issue of 2024 of the Behind the Street newsletter. Look at all this garbage. So we will be sending that out right around 7:30. So a few hours after the closing bell. We're going to be talking about historical performance of the S&P 500 during election years. We're going to be doing a deep dive into the ISM manufacturing report that came out today. We're going to be talking about private equity and the potential resurgence of both public and private markets. Right, we'll be talking about Goldman Sachs. And maybe at the end, I'll give you guys an exclusive tour of our new penthouse listing in Brooklyn at the Conover, 199 Conover Street, penthouse 3A. So if you want to receive that tomorrow, just type !news, NEWS in the chat, and click the link to our Substack. We will be sending that out tomorrow. Oh, this is one of my favorite steakhouses in the city. This is Del Frisco's. Anybody else a big fan of Del Frisco's? Place is great. Oh, look at this. So they're just taking down the Christmas decorations here. Look at that. It's funny because we just caught this on the live stream this year of them putting these up. See, that's how fast time goes by. I quite literally remember doing the live stream of not only watching them put these ornaments up, but we did the live stream of them constructing the Christmas tree on top of Radio City Music Hall. And now we're doing a live stream watching them take it down. It's crazy. I feel like I just did that stream. It's so wild. Hey, J49 says, are tomahawk steaks overrated? I like New York strip steaks or ribeyes. Are my personal favorite. What about you guys? What's your favorite cut of steak? I think either New York strip or ribeye. Hey, Star, thank you so much. Says, hey, Tom, I just subscribed. The beautiful New York City architecture. Love the great buildings of all sizes. Thank you so much for being here. Ryan Beck says, ribeyes all day. Yeah, ribeyes are good. Wow. Bree Graham's ribeye 100%. Troy Atman's filet mignon. Sirloin steaks is Michelle. Porterhouse. New York strip. I like New York strip because it's a little bit tougher. I kind of like that sometimes. But you know what? There's nothing better. And you guys probably will agree or disagree with this, but there's nothing better, and I'm convinced that steak tastes way better when it's cooked on those $10 sort of Walmart fold-up grills that you buy for the 4th of July and then they rust out and you throw them out. For whatever reason, they taste way better like that. Those $10 little rinky-dink Walmart charcoal grills are fantastic. IPDS is nothing better than a medium. I know Cape Cod Sarah says, I wonder how many times that Jay-Z song is played. I think too much. Now, you know what? That brings up a good point, because if they're going to start to fine people for excessive noise, if anything, the cars aren't the problems, in my opinion. What's more of an annoying nuisance than vehicles in the city are those pedicab guys. I mean, those guys are horrible. Like, those guys are the worst. Not being mean, I get it, they're just trying to make a living, but I mean, they hammer on the music. I mean, that must be like 1 trillion decibels those guys play. Maybe the NYPD will start cracking down on that if they're gonna really start to ticket people for honking their horns. I mean, I feel as if those guys play the music louder than just honking your horn. Who knows? Hey, Layda, what's up? Good to see you. I think next week the NYPD is going to open up this street to car traffic again. Josh S, that's how they get customers. I don't know. I feel like I would be less likely to hop in a pedicab if they're blasting music. I don't know, maybe that's just me. All right, at least we'll get to see the Rockefeller Center Christmas tree one last time. Hey, 48, what's up from New Zealand? This is Tom, hope you're well. Thanks so much. Hey, D Dirty says, hey Tom, did I miss any conversation about the banning of vendors on the Brooklyn Bridge? I think we talked about it a little bit, but I'm not even too sure about it. The only reason why I've heard about it is from the viewers sort of talking about it, but so how are they going to enforce that? What is this, the police going to come up and start ticketing people for selling things on the Brooklyn Bridge? I just don't know how you would enforce that. You'd probably have to have a police officer on the bridge 24/7, right? I don't know. I do notice this year that there's probably been more street vendors than ever before than I remember. Is it a problem? Yeah, but I think it all comes down to priority, right? Like, what is the priority? I think they should do order of operations, kind of like when you were back in, you know, elementary school math. Let's do order of operations here. Okay, what's more important? You know, getting the little guy that's selling mangoes on the bridge out of there, or the guy that's harassing everybody with a knife on the subway? You know, let's get the guy, you know, on the subway out of there. And since I've been taking the subway more and more often, I've been seeing so many problems. Now, in my experience, and let me know if you guys agree or disagree, the green line, the 456, always has problems, particularly after 10 p.m. You always have bad actors on that train. I was just in a very bad experience, not even at night, in the middle of the day. You know, we were all coming back from Lower Manhattan. We were headed to the Upper East Side. And just this random guy, you know, picks a fight with just this random dude on the train. Gets all in his face, you know, threatening to kill him, you know, all the stuff. It's just like, why don't we focus on getting rid of that stuff instead of the, you know, the little lady selling churros? At least the lady selling churros is not trying to stab me and threaten my life. She's just trying to make a couple bucks. Anyway. Wow, look at how empty it is today. Talk about a night and day difference, right? Last week we couldn't even stand here in this location. There were so many people. Crazy to see the contrast, right? Hey, Mel J is joining us. What's up, Mel? I know, TK Porsche says they should keep the decorations up permanently at Dior or Saks Fifth Avenue. I agree, I like this thing a lot. I don't think I'll ever get tired of looking at this. Usually I get tired of looking at the Saks Fifth Avenue light show, but this one was so, perfectly done this year. Oh, no way, is that right? Peter says, hey Tom, I attended the 75th lighting of the tree and had a VIP pass, but froze that year. Oh, it was cold, right? Well, apparently we could potentially have a snowstorm on Saturday, but it's looking like it may be a little bit too warm for that. So we'll probably just be in a torrential downpour. Look, they're already taking down the decorations on the Cartier store too. All right, let's head back uptown to Madison Avenue. Hey, Carl Ross, Tom, imagine with credit card debt or loan, car loan debt, student loan debt, Christmas debt, and mortgage debt, and a job that will be the next on unemployment, 33% of the market. What do you mean by that? So you're saying like debt balances are at all-time highs? That's true. Now, I was reading something, but I didn't really look into it. Now, apparently student loan payments have now restarted. Is that correct? So obviously we had the student loan for forbearance. So during the pandemic, no one had to pay their student loans. But now they've restarted, and I guess like almost nobody is paying them. Now, there could be a few reasons for that, I think. Number one, maybe people just forgot about it, right? I mean, if you didn't have to pay your student loans for like 2 years and then they start back up, how many people honestly, genuinely just like totally forgot to pay it? So maybe those numbers are inflated, or maybe it'll start to be a bigger crisis and more defaults, or, you know, with the government, the Biden administration trying to forgive student loans, people are saying, wait, maybe if I just hold out and wait out long enough, maybe I'll be the next, you know, name to be picked out of the hat to get this lottery ticket, and I won't have to pay my student loans, right? Some people, I believe, already have had their student loans forgiven. So what message is that sending to everybody else, right? Why are you so special that you have your loans forgiven and not the other guy, right? So in my opinion, I've always said, look, if you're gonna cancel student debt, it's either you go big and you do it for everybody, or you do it for nobody, right? And I'm against canceling student debt. I'm actually against that position, but living in reality, when the Democrats want to do it, right, and it looks like they're gonna do it, it's either you gotta go big and do it for everybody, or you gotta do it for nobody, or it's gonna cause pandemonium. That's sort of what I have to say. So I don't know. Who knows? Now, additionally, all right, let's take that one step further, shall we? If you're gonna go big and cancel all the student debt, you then have to simultaneously, on the same day, you cancel all the student loans. You have to say, okay, we canceled the student debt, and now we are officially getting the government out of the business in guaranteeing these student loans. You have got to do that, because you can't just cancel the student loans and then not fix the problem, right? The reason why we have so many students in student debt is because of the government guaranteeing all of this debt, right? Because you essentially remove free market capitalism from the system, and you're incentivizing colleges to raise prices, not lower prices, right? If I was running a car dealership, right, and the government said, you know what, anybody is able to qualify for any amount of loan. You could take on any amount in perpetuity, doesn't matter. Well, you're going to see prices of vehicles skyrocket, right? Why not make a car $1 trillion? You know, people are going to be able to take out money to afford the payments, right, to get the loan. That's what we do with college, right? We automatically guarantee the loan. So colleges have no incentive to be competitive on price. If anything, they're incentivized to, you know, have more corporate bloat, grow the administrative expenses, you know, build more fancy, you know, dining halls, dormitories, invest more money into the sports programs. Anyway, well, I think that should do it, my friends. I had no idea we were already streaming for 2 hours. So it has come that time again. I know, very sad time. But try to hold back the tears, because we will be back live tomorrow. No worries. I want to wish everybody a very happy new year. Thank you so much for joining us tonight on Walks on Wall Street. If you enjoyed the stream, feel free to leave a like on the video. Click the subscribe button if you're new, and if you want to sign up for our free investing newsletter, just type !news, N-E-W-S, in the chat and click the link to our Substack and punch in your email. I'm going to send it out tomorrow at 7:30. So Mr. King of Florida, Scott, appreciate it. Optimus17, Lay the D, Dusty Cole, Austin City Limits, Lori Crockett Owens, Foxing, Joseph Hardaway, J49, appreciate it. Nina, all of our moderators, Hawaii, the one and only Hawaii, thanks so much for joining us. Ryan Beck, Sharon, Tahoe, there's always a bull market somewhere. You just need to know where to look. All right, guys, have a good night. Signing off from New York City, 5th Avenue. Take care.